let's meet our amazing panelists. First of all, Anna Mitchell. Hello, Anna.
Hi there.
Great to see you. Where are you today, Anna?
I'm in central London.
Central London. Anna is the head of Marketplace at Starling Bank. Great to see you. Next up, we have Russell Pert. Hello, Russell.
Hi there.
And where do we find you today?
North of London, in Hertfordshire.
In Hertfordshire, lovely Hertfordshire. Russell is the industry head financial services at Facebook. Great to have you with us. Pauline van Brakel. Hello, Pauline.
Hi.
There you are. Good to see you. Chief Product Officer at Yolt. Great to have you with us. James Barker. We have just met. James, hello.
Hi again.
Great to have you back. James is the commercial director. Is a commercial director for EMEA at Mambu. And last but not least, we have Germain Bahri. Germain, hello.
Hello, everyone. I'm from sunny Munich.
Sunny Munich. How lovely. Germain is a digital banking consultant for Fidor Bank. Great to have you all with us today. Okay, we've got lots to cover as always. And I'm sure you have your own questions or comments for us. So, as I said, get in touch. You are the extra person in our panel as we finish off the day today. Get in touch, ask us your questions, and we will answer them towards the end of the discussion if we can. First of all, let's start off with by setting the scene, looking at platformification strategies as we move forward post-COVID. Okay. What's driving banks to explore new business models right now? How do the drivers differ between incumbents, neobanks, and various other players? Okay, what's happening right now? Germain, if you wouldn't mind starting us off, in terms of business models, what is driving change?
Yeah, I think there are a few drivers, but obviously one of the main ones that we all know is that the current and traditional banking models have been mostly weakened by the ever changing customer experience. I mean, customers now are used to the experience across Spotify, Amazon's, and Netflix of the world. So I guess that has put a lot of pressure on the experience across financial services. But I think the main one is really changes like PSD2 open banking, which basically has lowered the barriers to entry in financial services, leading to a wide range of alternatives entering the marketplace. So with offering competitive offerings with better UX at a fraction of the cost. So I think in short that has put a lot of pressure for banks to on their pressure, on the headcounts, but also putting them at risk to lose touch with the customer. So I think banks definitely need to search for a new role to reflect the evolving society and really adapt their organizational design. So I guess that's from the point of view of banks. But that's in terms of fintech and new entrants, it's definitely in the opportunity.
Anna, John, throwing it to you as well. What do you think is changing things at the moment? I mean, it's important to explore new banking models. We've heard throughout the day today that if you stand still, you don't stay still. You don't stay very long. So it's very important to keep on refreshing, keep on listening to customers, keep on offering new services that are tailored, that are personalized.
Absolutely. I mean, I guess from Starling's perspective, the whole reason Starling was created was because we felt banking was broken. And I think Anne had tried throughout her career to maybe improve things from the inside out, and just it wasn't going to happen. So we started a bank from scratch and went from there. I think in terms of change, it's maybe not the driver, but a huge enabler is definitely technology. And, I think it bears repeating multiple times that not being kind of encumbered by a legacy technology stack is such a huge opportunity for the likes of Starling and other challenger banks to go out there and do things that incumbents can only dream of, really.
I know somebody who works for a technology firm. Russell, what do you think?
Hi. I think the technology part's very interesting. I think what we see, we feel there's a bit of a driver in this change is historically, what we're seeing more and more now is that people are in a discovery mode. And what I mean by that is that historically people would search for brands, but brands can now search for people, and they can do it highly effective on platforms like Facebook and others in order to disrupt entire industries. And you don't have to look far to see that, whether it's in the banking sector or whether in retail or whatever it may be. And I think that's a key factor that we're seeing play out time and time again.
And finally, Pauline, can I ask you the same sort of thing? What do you think? I mean, yes, there are many drivers. Yes, PSD2 and open banking, obviously APIs, and customer need to a certain degree. Obviously, our current situation has changed what banks need to offer to customers, whether or not they change their model as such. What do you think in terms of how the industry is changing and needs to change, not least because of what we've just been through in the last few months?
Yeah, I think that's a very, very valid point. So I have a lot in common, I think, with the previous people, that I also think that customer demands have been changing and will be changing. Yeah. And even though, as James also mentioned in his presentation earlier, some of these changes of on-demand and personalization have been part of banks already. So you see especially the neobanks having a smooth onboarding. I think there's a lot of gained there. But as a whole industry, I think we're definitely, the incumbent banks definitely are not there yet when we talk about having just a real-time balance or having money instantly moving on accounts, seeing all your accounts in one view, which you can actually with Yolt. But as soon as the scope of PSD2 will hopefully broaden, you can even see your whole financial situation in one view. Yeah. So I think there's technology, there's regulation, but there's also user demand, which is going to drive a lot of these changes and asking for a lot of changes. And if you really want to succeed, I believe the customer should be in the heart and the central of your business. And you should really tap into that change and make it happen. Yeah. And with COVID-19, I think that change will only be more prominent and more required and asked for by users, and therefore there's more urgency, I would say, to fulfill it.
Yeah, and even one step further, to embrace the customer in a way that perhaps wasn't happening before COVID. I'm giving James just a moment because he was speaking for some time extremely well. So I'm giving you a moment. We'll come back to you in a moment, James. Anna, obviously, banks have been for many years trying to broaden out services, to focus on, connection, to connect services better, to become, if you like, omnichannel or possibly opti-channel we heard about today. Has the pandemic reinforced that or driven it to somewhere else? Has that connection? Because I from anecdotally, I've seen a lot of banks talking, really with bodies on the ground, people helping out, doing what they used to do extremely well and under pressure. But connecting the services actually takes sometimes a bit longer, doesn't it?
Yeah, I guess, I was thinking about this before, how much of an impact has COVID really had on kind of our strategy? And don't get me wrong, there's a couple of things that we have done that are very specific to the pandemic and our customer needs, such as our connected cards offering. However, I think we're actually in a really great position in that a lot of the things we were already doing are actually ideal. So for instance, in our marketplace, we've now got this integration with Slack, which is obviously ideal and such a lifeline in periods like this where everyone's really distributed and no longer side by side with their colleagues. And I think, it's maybe just made the value of having all your different services synced up and not just disparate, even more valuable now than it was before. But I think our business model and the technology enabling all of it was already, it's kind of just strengthens us. So whether it's trends like contactless payments or stuff like that, I think Starling has not only kind of survived this pandemic, but somehow kind of thrived through it.
Yeah, it's come up a couple of times today, the need, the drive, the urge to own everything in the customer relationship seems to be slipping away at the moment. There seems to be a much more, because of open banking, if nothing else, the partnerships, the relationships, the way that customers get their services from you and advice and marketplace banking, all those things have widened out. There is an attitude that's changed. James, to you, you've been speaking a lot this afternoon, but, in terms of what you think we've learned from COVID-19, immediate priorities and also, how we act as an industry, what's changed?
I think COVID is just a very extreme example of smaller things that we see kind of every day in our lives. So, COVID highlights the importance of agility, and I'm sorry I keep on banging that same drum, but really anywhere in business, the market is providing you feedback, customers are providing you feedback. It's obviously not so loud. The signal isn't always as strong as something as like a global pandemic, but we should always be listening and responding and using that opportunity to make microscopic small adjustments to everything that we do and how we engage in the marketplace. So I agree with Anna. I don't think this is really changed anything. This is just a very, almost caricaturish example. It's just such an extreme example.
Yeah. Yeah. Germain, let's move on. Everything as a service has been talked about on the cards for some time, whether that's risk as a service or treasury as a service, KYC as a service, everything as a service. Now, has this worked so far, do you think, Germain?
Yeah. Well, I think, again, looking at the current business models of banks and the clients we work with, where they've traditionally always self-manufactured or self-distributed their products, does not seem to currently lend basically themselves to network effects, basically in terms of scalability, and it does not allow them to remain competitive across a range of product and really enjoy the best-in-class products whenever you have fintechs that actually do something extremely well. Mm-hmm. So with the as-a-service sort of models, any sort of fintechs can actually become a bank with just a few lines of code, or for banks can actually take pick and choose the best in-breed services. And also they can actually pay for applications as they use them versus either buying them or actually developing them in-house, as we saw in the previous presentation. So rather to actually pay for the development costs, which typically cost a fortune, they can get them nearly for free in most providers like Fidor, like Mambu, and so forth, which allow them to also connect to these modules and services, but also easily expand to other markets. So I just want to refer also to a quote that I think we've all came across, where Alibaba is the most valuable retailer but has no inventory, Uber the largest taxi company but doesn't own any fleets of the vehicles. I think there's no logical reason today why banks should not be delivered as a software as a service or as a SaaS or as a service model, using plug and play application and sticking them together. So I really think over time we may see a model where banks actually act as a sort of warehouse, bringing together all the best in the fintechs, like we've seen with N26, Monzo, Starling, Fidor Bank as well, but also with providers as a service providers like Mambu, like Fidor, like Solaris Bank. So I think that's definitely one of the models that we'll see emerging.
Yeah. Okay, let's look at the poll results. You've been kind enough to tell us what you think by clicking a button and letting us know about this question. The question was, what new business model is likely to be the most successful for incumbent players? Marketplace models, offering everything as a service, as we've just been talking about, or delivering a niche offering. Okay, interesting actually in some ways. The lowest, and I'm not surprised by this, but maybe you will be, delivering a niche offering at 25% was our lowest number of responses for that answer. At 33%, so not that much more, was everything as a service. So the two extremes. Marketplace models, 43%. Half of you think that's, I'll basically think that's the way to go. Pauline, what do you think about that? Marketplace models, is that inevitably what people are going to focus on right now?
Well, of course, I cannot talk for the strategy from everyone, but it does seem a strategy where a lot of players are indeed headed towards. So is Yolt as well. So what we really do is all about enabling the power of open banking, bringing all the accounts together in one view for people. So whether it's bank accounts or current accounts, and then really giving smart insights on where they spend their money on. And also give people then the ability to actually act upon those insights. And to do that, we have integrated with a lot of partners as well. So with, for example, Money Supermarket for energy, or with Raisin for savings accounts. But we also work with a partner such as PensionBee, who has quite a unique proposition. And interestingly enough, also works, for example, with Starling, which is part of our panel today as well. And I think for a party such as PensionBee, it's definitely interesting to work with different networks or different platforms, because then you instantly expand and diversify your offering by being present on different channels. While for our users, it's definitely very relevant to have such a product and such a company connected to our platform, because what people truly value is the all-in-one place. So still being able to see all their finances in one place, while not necessarily needing to have all their products at one bank. So the combination of actually people who are best in class or best in industry, but have that connected in one view, that's definitely something we at Yolt strive for. And that's also why we work together with a lot of trusted partners.
Yeah, absolutely. James, I was quite interested in this, in delivering a niche offering, being at 24, 25%, 24% now. That seems quite high to me. I could be wrong there, but for incumbent players, that seems pretty high.
Yeah, perhaps so. I mean, I'm a little bit surprised by that, but Yeah, I'm not going to argue with your audience there. I think the generalist version, the niche player thing is still something that's emerging. I mean, if you look at some of the first entrants, they are more general people like Starling or N26 or Revolut. I think actually a lot of the niche players fly under the radar a little bit more. They don't grab as much publicity, but they're still there.
Anna, interestingly, Anna, this won't worry you too much, but for lesser players, it may worry you that incumbent players in this poll are going to come into your market and say, right, we're going to offer a niche offering. That's what we're going to do from now on. Watch out, newcomers. You're not worried by that, are you?
No. Not at all, I'm afraid. Yeah. I think in terms of competition, the incumbent banks are probably the least of my concerns, or the last area I'm too worried about.
Yeah. Great. Back to Pauline for a second. How can you design better multi-channel strategies? We talked a lot about omni-channel in our last sessions, but multi-channel, or opti-channel, how do you start to improve the way you connect up all of the services and offer something consistent to every customer?
So the question is a bit how you, of course, see multi-channel. So maybe that's the question back to you. What did you have in mind with multi-channel in this?
Well, multi-channel essentially is a discrete set of channels rather than omni-channel being, all the way through. But I think, if I said multi-channel to you, I think that's possibly a little bit old school. I think possibly right now, it needs to be ultimate choice to the consumer. So, if not multi-channel, what channel?
Yeah, I think it should be the channel where the user wants it indeed to be at that moment in time, and on that moment where it's most relevant. So one of the key things is to be very data-driven, understand your user, understand their preferences, and be spot on with the right product or the right suggestion on the right time via the right channel. And whether that is indeed direct, indirect, it's email, push, in-app, it's via a third-party provider. That should not matter so much as long as you're relevant to the user, you're timed, and you solve a real problem for them. Because that's, I think, where the real crux is. If you really solve a problem for the users, then the rest will follow from the back of it.
Yeah, I think relevance is going to be one of those words that we take away with us. It'll be ringing in our ears forever and a day after we finish our event in the next 2 days. Russell, what can banks learn from you guys, the big tech giants? If you don't mind telling them.
What's the special sauce? I guess like many tech giants, Facebook has quickly understood how to connect with consumers based on different needs and expectations, and built for platforms accordingly. If you consider before Facebook IPO'd, it was a desktop business, and I think right now people couldn't imagine that Facebook and its platforms were only desktop. But following the IPO, it really listened to consumers and the investors, and it went in lockdown for 6 months to essentially create what we know today as the apps across our platforms. And we're constantly looking, and then business now is mobile first. We build for mobile and then desktop later. We're constantly looking at ways in which we can evolve our products and features based on consumer needs. And a great example of this would be, on average, we consume about 300 feet of content on our news feed. That's the height of Big Ben as a reference point. And so we build new features and products based on the content that our community want to see. And I think that's a really important point, because many brands talk about consumer needs and talk about expectations, but actually making the leap from what they're seeing in terms of the data and the insights and actually actioning upon it is actually a difficult and a challenging thing to do. And that's something that Facebook, has strived to continuously look to be agile, put a focus groups on it if need be to really get those products and features out there.
Yeah, and it seems as though focus and prioritizing the data that you do use. I mean, I like the way that you use 300 feet rather than 100 meters. It's old school, and I appreciate that. I really do. James, in terms of what open banking gives us, where we go from here, do you think there are any people who are winning in this space already? And we meet some today. I mean, the people are right around us. But what does it take, I suppose, to update your bank, to update what you do already if you're an incumbent, or perhaps find that spot in the market where customers really appreciate, and your customers and your banking customers really appreciate what you have to offer. So, how do you jiggle this problem free and make open banking a great new landscape for us?
Yeah, I think open banking got given a bit of a bad rap because the weight of expectation on it was so completely unrealistic. We thought that the banks were going to make their APIs open and everyone would run out in the whole of England and change their bank account. And when that didn't happen, the media kind of rounds on it saying, "Oh no, that was a bit of a damp squib." And I think actually, just because it didn't happen overnight at once, it doesn't mean that it hasn't been happening. And I think the risk to the incumbents is something that's happening, but it's more, to use an analogy, like the frog in boiling water, getting it turned up slowly. I think people don't tend to just go out, wake up one morning and go, "You know what, I'm going to change my current account just because I can, because it's easier than it was." I think it's a drip, drip, drip of new features. And I use probably Revolut as an example. For me, that's one of my main accounts now. I think it's probably my, certainly a key account. But I didn't do it the moment they released multi-currency. They were dripping new features into that, which were becoming more and more and more and more relevant, until, as a consumer, suddenly one day it was a cumulative enough reason for me to make that card something more than I just used when I was going on holiday or traveling abroad. So I think open banking is still has a huge way to go. And I think as the banks, whether they're neos or the traditional banks, really focus on what I would call practical innovation, the more of those that they can land, I think you're gonna see open banking and the movement of current accounts really start to gain traction now. And of course, it's not like they're going to vanish overnight tomorrow. It's going to be something that takes place over the next couple of years, but I think it's going to pick up momentum.
Very good. So look, if at home, I'd like you to hear from you. If you have a question for our panel, whatever it may be around our issues in our panel discussion this afternoon, please do send them in. Just do it to the left in the Q&A box. We'd love to hear from you. That'd be really good. And perhaps you can surprise us and throw us a couple of curveballs along the way. In a few minutes, we'll go to your questions. Look, we've touched on the marketplace model. Let's talk about the role of integration in driving new business models, new business. And in brief, what common challenges does integration cause, do you think?
Sure. I mean, I think it's worth recapping here at Starling, our marketplace. We now have 26 services live in that marketplace across different account types. And it's fantastic being able to offer our customers such a wide range of services. I think a distinction I'd really like to make is, integrations are slightly different from your traditional partnership models, i.e. it's a lot more, or it's intended to be a lot more self-service, shall we say. We're maybe not quite there. There is still, lawyers involved, and that's always a challenge, shall we say. But I think, the beauty of open APIs is that it should allow us to connect different systems together a lot more seamlessly. So a lot of the pain points in the past between kind of bringing systems together should no longer be so painful for us.
Yeah. Germain, one of the holy grails, if you like, is to become lifestyle partners, to really, become something that customers, whoever the customer may be, really wants to interact with in order to get what they want from their money. What are we getting wrong, and what needs to change, do you think?
Yeah. I think you're definitely right. Whether it's banks, whether it's telecom and big tech, they're all in competition for people's attention. They want to capture the data, monetize their attention, and essentially build a more dependency or deepen the customer engagement. So I think basically the idea really is the right direction is really mostly coming from the east. When you look at the lifestyle super app like WeChat, like Alipay, like Pingyan, and so on, where they've basically built a full ecosystem around the customers, where people want to engage but also needs to spend the time in. So I guess that is a little bit the ecosystem model that the bank should aim at. In order to get there, I would say I would encourage banks to really seek to build the ecosystem either via building an API layer where they can, as Starling mentioned, integrate a range of partners, or if they cannot do it because they have a legacy infrastructure, they should definitely reach out to partners again like Mambu, like Fidor, that either can integrate easily with the range of partners, or they've already integrated to essentially really build an ecosystem of going beyond just traditional financial services.
Yeah. We're going to go into your audience questions in just a couple of minutes' time. We've got a couple more questions here first. So thanks for sending them in. Keep on sending them in. That'll be great. And then we'll talk to our pundit for this afternoon, Firoz Nordin, at the end. But over to James. Look, can you just, if you can, define beyond banking as you see it, James? And, do we need to get there faster?
I suppose it depends what you mean by beyond banking, but I suppose my understanding of that would be banks offering things other than the traditional banking products, more value-added services.
Yeah.
So, look, I think of great banking particularly in two very different lenses. The first is, I think banks are clamoring for attention, but I think it might be a mistake for them to judge their success in the same way that Facebook does. So Facebook essentially tracks screen time, but it's a very different type of proposition. Banking doesn't need to be sexy. Actually, the best banking might be invisible. You've done it right when it's completely frictionless, when it's automated and you don't need to see or touch it. And I suppose the other side of that is, how can you enhance banking to be what you referred to as going beyond banking? And I think we've seen, there was actually a couple of examples of banks stepping beyond traditional banking that I've seen. So first of all, another fantastic British fintech, you've got the guys at Bud, who are talking about how they can take that financial data and use it to add value to you as a consumer. So potentially, recommending that you change your electricity supplier or your car finance, just using that data to proactively offer you something that is of value. And I think that definitely it's using the financial data to step beyond. And the second one is a fantastic Nordic company called Mina Technologies, and they use it to manage your subscription. So, for example, you've been leaving your Sky subscription open for ages and you don't want to spend 2 hours on the phone to their customer services, you can just end that subscription through your bank. So I think those are two very good examples that start to go beyond, but you're not ever going to go to your bank and ask them to decorate your house. I think that becomes a little bit too much of a fantastical scenario. But the two I just gave, I think that they have real life applications. So I'm interested to see how it goes, obviously within the rounds of what I referred to earlier as practical innovation.
Yeah, and I think if your banker came round to decorate your house, they'd get their suit dirty, and that's not really preferable. So, listen, we can talk about ecosystems a bit more, but let's just finish off with a point from Russell. Really, what ecosystem of connections do you think we'll see moving forward? In fact, ecosystems of connections, maybe that needs defining too. Is it the network of suppliers? Is it the network of customers? How do you see an ecosystem of connections?
So we're seeing that what's happening across the platform are more and more brands are looking at ways in which they can distribute their services. So historically, you would be looking as a consumer to go to a traditional banking app or a fintech banking app, but actually it's about where consumers are living their lives.
Yeah.
And if you can bring those services into that space and actually make some sort of instant, fast, seamless experience, then it enables you to not only increase your footprint of distribution, but also it's what consumers are expecting. We're seeing the rise of messenger bots with car insurance providers that can essentially give you a quote within a few minutes, and that's all plugged in with a DVLA and others through APIs. We're seeing telecoms businesses use WhatsApp to reach out to the existing customers in places like Germany. So I think, clearly there are a variety of different platforms that brands can use to distribute their services. But what is absolutely key and critical is that, with over 1 million apps available, is consumers don't spend huge amounts of time in a lot of them. They spend probably, I think it's 5 apps they go into on a regular basis. And so the need to be present in other spaces where they are spending time and their attention is there is absolutely critical. And we're seeing that across our platforms and others.
Great. Well, stay with us. We've got a couple more minutes for your questions, many coming through, and then we'll talk to Fidor's Nordine for a sum up of the day so far. Okay, questions here. Let's have a listen. There's some really good questions here, actually. So let's try and pick some of my favorites. Hopefully, I'm not picking the ones that I just find entertaining. Switching is becoming easier. Are incumbents moving fast enough to maintain their client base as competitors bring out faster and better services? Now, I'm going to get provocative. Anna, are they moving fast enough?
No, I think especially on the business side of things, this pandemic in particular has really shown, there's a gap in the market and they're just not providing the services that customers need.
Anyone on the other side? Pauline, what do you think about that?
Well, I'm not really on the other side, I would say.
No, but, looking for balance, but we can't.
No. Yeah. But I think maybe what I can add is I agree with, and I think there's a lot of opportunities, and that we can that can be stepped in quicker. And especially I see a trend around, hopefully in the future, on automated banking even. So instead of the user still having to do all the hard work and heavy lifting, but actually we can just do it for them. So for example, instead of always searching for the right product, and then we're now moving towards, I would say, the right product being offered to them. It might be that we actually switch to a better product for a person and just letting the customer know in the end that we have already done it for them. So I think if we have that as an end goal, we have a long way to go.
Yeah. Any other thoughts? Hands up from that on that question. We can move on. That's no problem at all. That's great. Okay. Question here. What is the best monetization approach when it comes to partnering with TPPs? Any thoughts on TPPs? Can I throw it briefly? Do you mind if I throw it to you, James? I know it's probably one that's brushing the sides of everyone's time and experience here, but any thoughts on that partnership side of things?
So how TPPs are going to monetize their business?
Well, yes. I mean, this question is, what's the best approach when it comes to partnering with TPPs to make money?
I'm really not educated enough to feel that one.
Not at all. Anybody else? Listen, I'm afraid I can't answer that at the moment, but I'm sure we'll try and wrap around into it in a couple of minutes if anyone comes up with something. But thanks for the question. Okay, another question. There are lots of ones here. They're quite specific. We'll do what we can. We can't do any more than that. Can we expect the WeChat model to come to Europe? If not, why not? WeChat. Any thoughts there? It's the end of the day. Okay, people looking down? No, okay, let's move on. Thank you very much for your questions. These are great, but we can't always answer every single question. Okay. Why do you think there's a right to play for banks in the marketplace business compared to an independent third party? And how do we convince consumers of this? So why do you think there's a right to play for banks in the marketplace compared to it? I'm not sure I understand that question either. I'm really sorry about this. Let's have a look. Anybody else hands up to that question? No? Okay. Lots and lots of questions coming through. Let's try. Okay. This one hopefully is going to be a bit easier. You're asking some great questions. What does the future of challenger banks look like? Will they wholly move into the banking as a service space? Any hands up for that? Come on. Yes, Germain, please. Yeah.
Well, I think we're already seeing some of the models. I guess Fidor Bank was one of the first ones, starting as a pure digital bank for customer facing, and then we eventually carved out our tech and IT department to move to a banking as a service model. I think Starling Bank is doing it. So look, let's see. It's a question, but I think it's a very interesting models worth exploring.
Yeah, I think this next one is one that everyone can answer in their own way. As new banks scale up, and this could be incumbents who are changing the way they operate, as new banks scale up, how can they ensure that the focus is always on the customer and their experiences? Now then, I'm going to throw that to Russell briefly, if you don't mind. I know it's a banking question, but actually, the customer experience is such an important thing. We've talked about it a lot today, clearly, but you have to really nurture that relationship. It doesn't happen overnight. So, Russell, in principle, what do you think the steps are to whatever your business actually to listen, respond, build services, respond, and so on?
Yeah, so many banks are actually creating Facebook groups as an environment to build a community that can ultimately shape the future experiences and the way that they deliver communications, to the customers. And we're seeing this particularly in the fintech space at the moment, but we're starting to see traditional incumbents adopt a similar route. And I think the richness of insight that brands are gathering from that and then actioning it within their own services is critical. But we've also got, as I mentioned in the last comment, we've got quite a bit of evidence now that suggests, and we're seeing some third parties around messenger and messaging being a critical way that consumers want to engage with brands. And it's about taking those steps forward away from necessarily some of the traditional approaches of SMS and into this sort of messaging space, and working out how you can represent yourself as a brand, but also stay humanized as well, which is absolutely critical in the financial services sector.